Hello, welcome back to my channel. Today we continue to talk about digital money. In previous series we already talked about digital money. We tried to understand digital money. In this series we will uh, check the digital money types of digital money. Thanks to its technological underpinning. Digital money can be adapted to suit multiple purposes and also can take in various forms. The three adaptations of digital money that have emerged in recent times are as follows: central bank digital currencies, CBDCs. Central bank digital currencies are currencies issued by the central bank of a country. They are separate from fiat currencies, which are also backed by the authority credit of central bank and another obligation of the institutions. CBDAC is monetary policy implementation by removing intermediaries from the policy by establishing a direct connection between the government and the average citizen. Banks and financial institutions responsible for disturbing national currency are no longer required in the process. Depending on their use and type of implementation in the economy. There can be two types of CBDC: retail CBDC and designed to be used for daily transaction, which like fiat currencies, in a more limited implementation of the concept. Wholesale CBDC are used for transaction conducted between banks and financial institutions. Cryptocurrency. Cryptocurrencies are digital currencies designed using cryptography. The crypto wrapper around digital currency provides enhanced security and makes transaction tamper resist. The most popular cryptocurrencies are Bitcoin and Ethereum. Since 2017, the popularity of cryptocurrencies as an investment class has skyrocketed their value and the overall market capitalization of crypto markets. By July 2021, the market cap of cryptocurrencies has surpassed $2 trillion. Stablecoins. Stablecoins are a variation of cryptocurrencies and were developed to counter the price volatility of regular cryptocurrencies. Stablecoins can be likened to a form of private money whose price is tied to that of fiat currency or a basket of goods to ensure that they remain stable. They can be a proxy for fiat currencies, except they are not backed by governmental auditory. The market for stablecoins has exploded in recent times. As of February of 2021, 200 stablecoins has been released on were in development. Advantages of digital money. The current financial infrastructure is a complex system of many entities. Conducting transactions between financial institutions takes time and money because they work in different technological systems and regulation regimes. The main advantage of digital money is that it speeds up transactions, and cuts back on costs. Other advantage of digital money are as follows. First of them is digital money eliminates the need for physical storage and safekeeping that is a characteristic of cash investment system. You don't need to invest in a wallet or bank wallet to ensure that your money is not stolen. Digital money simplifies accounting and record keeping for transactions without technology. Therefore, manual accounting and separate entity-specific ledger are not necessary to maintain records of transaction. Well, it has already shortened the amount of time and the costs required to transfer money across borders. Digital money has the potential to further revolutionize the remittance industry by eliminating intermediaries and further reducing the cost associated with cross-border transfers. Digital money removes the intermediates in the implementation of monetary policy and makes it possible to include different groups from the economy. For example, those who are unbanked can still participate in an economy by using digital money present in their online wallet or mobile phones. In this case of cryptocurrencies, digital money transaction can become censorship resistant, meaning they can be impervious to tracking by government or other authorities. What is the disadvantages of digital money? Digital money is susceptible to hacking, even as it removes the need for physical safekeeping. Digital money origins in technology ensures that this form of money becomes a target for hackers who can steal from digital wallets. Assembly's financial infrastructure consists of digital connected entities can be brought down by hackers. The 2018 SWIFT hacks, which affected multiple countries, are an example. Hacks of digital money on a large scale had the potential to bring a country financial infrastructure to heel and become a national security threat. Digital money use can compromise use privacy. Cash is anonymous and it is nearly impossible to track and trace its users. On the other hand, digital money can be traced, while the use of internet cookies enables targeted advertising. The implications for digital money tracking are more far-reaching. For example, organization of government could blacklist or freeze accounts with the permission of users. They could also instigate double accounting in bank account and inflating expenses and reducing the overall total. Digital money has its own set of costs. For example, digital wallets are required to store digital money. Cryptocurrencies also require custody solution that acts as a fail-safe against hackers. Systems that use blockchain also have to use for miners. Digital money presents several challenges on the governance and policy framework front. This form of money is uncharted territory for policymakers, and problems have already begun managing in its ecosystem. For example, the annuity of stablecoin is already under code. After Tether, the most widely used stablecoin in cryptocurrency market was found to have committed client and corporate funds and used funds from its reserve backup to ensure one pledge to the United States dollar to cover up its debt obligations. So, digital money is a major innovation in financial technology. It overcomes the problems of cash and makes payment system faster and cheaper. But it has the attendant problem of technology, as digital money can be hacked, it can erode privacy. While it is still early days for digital money, it will play an important part in future of finance. So, it's all for today. Thank you that watched this video thank you for watching and goodbye.